page 3 to page 5. So, honorable members, with your permission, we may start proper. And with that, I will invite the finance director of ZAYED Regional Center to do the presentation of the accounts for the years ended 31st of December 2019. Only the financials, which we can find on page 248. Page 248 is one book. Yes.
Good afternoon. Chair of Fpac committee.
Sorry. Just, yes.
Honorable Chair, for the purpose of reading, I was going to suggest we read the whole report, and maybe for the purpose of your consideration, you may wish to consider only those relevant years that you may wish to consider, if that is acceptable.
Thank you very much.
Thank you.
Sorry, just a moment. You may kindly put up the mic. He brought up a salient point. Yes, that's true, because you comment NAO, you've done a great job from 2006 to 2020. But the thing is, Parliament have already created a precedence. And if indeed we do the presentation, we'll have to do the considerations as well. But we know that, it's a standard protocol in auditing exercise. If at all in those preceding years there are issues that have not been resolved, they would have featured. And eventually, by the time we reach in 2019, it's either all those issues are resolved or they will still keep appearing. So that's why, since we'll only consider 2019 and 2020, it's only proper that we have the presentation for only those 2 years. But yes, that was a good point. Thank you. You may proceed.
Good afternoon, Mr. Chair of Fpac, Honorable, and all other members present, and ZAYED Regional Eye Care Center, the management of ZAYED Regional Eye Care Center, the National Audit Team. I am pleased for the first time to appear before this commission, and I'm also happy to be here to give a presentation of the financial statement, audited accounts 2019 to 2020. First of all, we look at the receipts. That is the receipts of the accounts that was received. That is ZAYED received from 2019 to 2020 that we are looking at comparatively. Under the receipt column, we have subventions. These are the subventions from government of the Gambia received by ZAYED from 2019 to 2020, which is amounted to 29,831.
Sorry, point of correction, 29 million. Huh?
29,835.02. And in 2018, we received 22,768,888.24. That's the total subvention that ZAYED received from government from 2019 to 2018. The DRF, that's the revenue generated from the sales of tickets to patients. In 2019, we have 3,335,268.53 bottles. In 2018, it's 4,281,671.59 bottles. That's the total DRF That's the sales of tickets to patients SHEIKH received 2019-2018. In the other income, that is the donation and others that we receive, SHEIKH received. That's $2,271,250 and zero bututs. In 2018, $8,500. In 2019, this other income is the fund SHEIKH received from Standard Chartered Bank to conduct a cataract operation. Tuition fee. The tuition fee, that's the students. SHEIKH is having a school that run the school where students coming from different countries in West Africa, and they train them. After training, they go back to their respective countries to do the cataract operation. And the CEO will elaborate more on that. That's the tuition fee received from students. It's $3,477,205.17. In 2018, $3,954,575.95 bututs. Total receipts for 2019 and 2018 is $38,879,308.72. In 2018, $31,013,635.78. This is total receipts for 2019 and 2018. Going back to the payments, these are receipts and payments. We have SHEIKH. We pay basic salary for SHEIKH staff, which have been separated from allowances. Basic staff salaries is $3,990,135.20 bututs. In 2018, $8,499,160.00. Staff allowances, that is allowances including board allowance paid to staff. We paid $15,664,903.33. In 2018, $11,516,280.35 bututs.
Point of correction, it should be 11 million. Huh?
$11,516,280.35 bututs. Building and maintenance. These are expenditure incurred in the building and maintenance of SHEIKH. In 2019, $389,112.50 was spent on building maintenance. In 2018, $522,309.00 was also spent in 2018. Drugs and consumables. SHEIKH buy drugs, most of the drugs and consumables to for patients, patients, normally SHEIKH order most of their drugs from overseas, India. So the expenditure on drugs and consumables, $2,932,686.82 bututs. In 2018, $1,658,188.55 bututs. Food and food items. These are the expenditure on SHEIKH incur on providing food for the patients. The total amount spent on 2019 is $851,260.60. In 2018, $413,069.50 bututs. Utilities, zero. In 2019 is zero. There's no expenditure incurred on 2019. In 2018, $9,775, zero bututs. Uniforms. These are uniforms that we spend on nurses and the doctors, the coat that they wear. Yes. So what SHEIKH spent is $64,320. In 2018, $51,333.00. Printing and duplications. These are sundries, no expenditure. but in 2018, 28,000 was spent, $28,000. In the printing and publication, this involved the patient folders, the printing of all the documents, including SHEIKH and the training block, the training school, the certificate of the students, and others. We SHEIKH spent $151,130. In 2018, 98,431.67. Stationaries. SHEIKH expenditure in stationery is $78,020. In 2018, $323,273.00. Furnitures, $92,267.95. In 2018, zero. There was no expenditure incurred in 2018. Hospital equipments, $640,562.49 buttons. In 2018, $248,225, zero buttons. Vehicle running costs, that's the fuel and maintenance of the vehicle of SHEIKH. In 2019, $1,173,084 buttons, $84.35 buttons. In 2018, $1,395,679.50 buttons. Equipment repair, that's maintenance of the photocopier, the machines of the SHEIKH. In 2019, $612,331.4 buttons. In 2018, 171,913.5 buttons. Telecommunication, that's internet, expenditure incurred on internet, telecommunication, CUG, SHEIKH in 2019, expenditure incurred in SHEIKH 2019 is 270,556.98 buttons. In 2018, 244,168.66 buttons. Office expenses, that's miscellaneous office expenses. In 2019, 565,715.00. And in 2018, $1,368,934.10 buttons, 10 buttons was spent. Training expenses, $1,545,813.65 buttons. In 2018, $2,045,866.70. Exams and graduation, $463,103.00. In 2018, $368,858.63 buttons. Training, traveling, $505,407.26 was spent on traveling. $304,346.50 was spent in 2018. Bank charges, $104,227.23. And in 2018, $81,445.40. IT and software, that is where SHEIKH has the IT software, and the total expenditure on it is $371,529.92 buttons. In 2018, $1,144,594.10 buttons. The total expenditure in 2019 is $37,802,760.68 buttons. In 2018, $30,640,197.16.
Sorry, you've jumped one line item. That is the soft loan and 1/6. Can you take that again?
Okay, soft loan and 1/6. These are soft salary advance given to staff, and also the soft loan, the 1/6 government says they receive from government. If you sum them together, you'll have $356,593.00. In 2018, $146,000 353.00. So the total expenditure, as I said before, is 37,802,760.68. In 2018, 30,640,197.16. So in the opening cash balance, that's for 2018, is negative 2,646,865.76. Yeah. Okay, the total closing balance of 2018, that's serve as the opening balance for 2019. So the opening balance for 2019 is negative 2,273,427.14. So in the closing balance of 2018, we have negative $1,196,876. 10 minutes.
Thank you very much. Thank you. So we will now invite the National Audit Office to give us the audit opinion for 2019. And you may proceed after the audit opinion to take us through the management letter for the salient points for 2019, if there is any. So the audit opinion for 2019 is on page 245. For the interest of members, page 245. Yes.
Honorable Chair, the management letter, we would wish to read it together because we have not categorized them by year. So I'm not sure if you would want us to wait until he read the 2020 before we read the management letter.
Very well then, we'll do that. Very well. So you can take the audit opinion for the year ended 31st of December 2019.
Thank you. Please refer to page 245 of the report. Qualified opinion. We have audited the accompanying financial statement of the SHEIKH ZAYED Regional Eye Care Center for the year ended 31st December 2019. The financial statement comprises of the statement of receipt and payments and a summary of significant accounting progresses and other explanatory information set out on pages 248 to 260. In our opinion, except for the effects of the matters described in the basis for qualified opinion section of our report, the statement of receipt and payments and related notes set out on pages 248 to 260 fairly present in all material respect the transaction of the SHEIKH ZAYED Regional Eye Care Center for the year ended 31st December and of the 31st December 2019 and of the result of the financial operation for the year then ended and is in accordance with International Public Sector Accounting Standard IPSAS, financial reporting on the cash basis accounting, and comply with the provision of the Public Finance Act 2014 and Financial Regulation 2016. Basis for qualified opinion. Number 1, closing balance. From our review of the financial statement, we noted that a negative difference of 3,703,070 between the negative closing cash balance 1,196,879 on the statement of receipt and payments, with that reported in note 28, 2,506,191. The breakdown of the figure in note 8 was not presented. Therefore, we could not establish which of the two balances is accurate. Number 2, unpresented payment vouchers. A total of 37,802,761 was recorded as payments in the financial statement. However, 12 payment vouchers totaling 160,850 from the samples selected were not presented for our review. We were unable to satisfy ourselves if those payments were properly authorized, approved and satisfied for payment, supported with adequate documentation, correctly classified and free from material error. Page 246, number 3, on verifiable cash postings and bank lodgements. The center recognized receipt totaling 38,879,303 subvention and other income in the financial statement. However, 2 other income receipt transactions amounting to 324,601, representing 0.83% of the receipt, was received as per the receipt books, but we could not confirm the lodgements into the bank account due to the absence of the bank statements. Number 4, difference between the financial statement and DRF correction. we noted a difference of 712,156.47 bututs between the reported amount in the financial statement, that is 3,353,268.53, and a DRF revenue collections 4,065,425 for the year. Therefore, the financial statement was understated by the difference. Thank you, Honorable Chair.
Thank you very much, National Audit Office. So we will refer back to the Finance Director for Sheikh ZAYED Regional Eye Care Center to do the presentation for the presentation of the financial statements for the year ended the 1st of December 2022. Sorry, 2020, 31st of December. I'll take that again. We refer back to the Finance Director of Sheikh ZAYED Regional Eye Care Center to do the presentation of the financial statement for the year ended 31st of December 2020. This should be on page 269 of the report. Page 269.
Thank you, Mr. Chair. 2020-2019. Can I read only 2020 or? Okay.
Yes, please.
2020.
Yes.
The subvention received for 2020 from January to December 2020 amounted to 36,478,609.93. DRF for 2020, total revenue generated during the year under review, that's 2020, from January to December 2020, the total amount received as DRF is amounted to $4,697,950. In donation, zero, there was no fund received on the donation. Interest received, that's interest received on the savings. So there we have a saving account in Trust Bank. So the interest received is $117,316.40 bututs. Fixed deposit accounts, we have also fixed deposit accounts on the Trust Bank. That's $1,211,690.44 bututs. The tuition fee received from students in 2020, $2,295,275.87 bututs. Total receipts received under 2020, $44,800,842.64 bututs. Payments, basic staff salary, 2020, $7,448,233.20 bututs. Staff allowances, $17,987,547.13 bututs. Building and maintenance, $295,801.00, no bututs. Drugs and consumable, $4,297,137.96 bututs. Food and food items, $865,776.15 bututs. Uniforms, $34,400, no bututs. Printing, $127,625.00, no bututs. Stationaries, $116,785.0 bututs. Furnitures, $121,347.0, no bututs. Hospital and other equipment, $895,455.0 bututs, 0.6 bututs. Motor vehicle running cost, $834,000. Equipment repair, no expenditure incurred. Telecommunication, $298,608.58 bututs. Training, $1,350,595.25 bututs. Exams and graduation, $243,750.00, no bututs. Traveling, $133,554.60 bututs. IT and software, 197,819.95 bututs. Office expenses, $793,504.50 bututs. Soft loan and 1/6, $1,505,876.60 bututs. GRA withholding tax, $423,053.14 bututs. Bank charges, $307,816.18 bututs. The total payment for 2020 is $38,278,686.30 bututs. So increase in cash is 6,522,156.34 bututs. The opening balance, that was the opening balance from 2018, 2019, is negative $1,198,96,879 bututs, $79.10 bututs. So the closing cash balance for 2020, $5,325,277.24 bututs.
Thank you very much to the Finance Director of ZAYED Regional Eye Care Center. Now we refer back to the National Audit Office to give us the audit opinion for the year ended 31st of December 2020.
Thank you, Honorable Chair. Please refer to page 266. Qualified opinion. We have audited the accompanying financial statement of the ZAYED Regional Eye Care Center for the year ended 31st December 2020. The financial statement comprised of statement of receipt and payments and a summary of significant accounting progresses and other explanatory information set out on pages 269 to 281. In our opinion, except for the effects of the matters described in the basis for qualified opinion section of our report, the statement of receipt and payments and related notes set out on pages 269 to 281 fairly present in all material respects the transaction of the ZAYED Regional Eye Care Center for the year ended 31st December 2020, and of the result of the financial operation for the year then ended, and is in accordance with International Public Sector Accounting Standard (IPSAS) financial reporting on the cash basis and accounting, and comply with the provision of the Public Finance Act 2014 and Financial Regulation 2016. Basis for qualified opinion. Number one, closing balance. From our review of the financial statement, we noted a difference of $1,006,132 between the closing cash balance $5,325,277 on the statement of receipts and payments, with that reported in note 29, $4,319,145. The breakdown of the figure in note 29 was not presented. Therefore, we could not establish which of the two balances is accurate. Number two, unpresented payment vouchers. A total amount of $38,278,686 was recorded as payments in the financial statement. However, 36 payment vouchers totaling $3,802,589, representing 9.93% of the payment from the samples selected, were not presented for our review. We were unable to satisfy ourselves if those payments were properly authorized, approved, and certified for payment, supported with adequate documentation, correctly classified, and free from material error. Number three, unverifiable cash book postings and bank lodgements. The center recognized receipt totaling $44,800,843, subvention and other income in the financial statement. However, three other income receipt transactions amounting to $1,113,336, representing 2.49% of the receipts, was received as per the receipt books, but we could not confirm the lodgements into the bank account due to the absence of the bank statement. Number four, difference between financial statement and DRF collection. we noted a difference of 846,275 between the reported amount in the financial statement, 4,697,950, and the DRF revenue collection, 3,851,675 for the year. Therefore, the financial statement was overstated by the difference. That's it for the opinion. So we go to, let's refer to page 297 of the management letter. I will be skipping some of them. 3.1.1, approved budget. Finding, we requested budgets for the period under review. Only the 2019 manpower budget was presented for our review. We were also not provided with evidence of approval either by the board or the ministry for the years under review. Recommendation, management and board should raise with the Ministry of Health before the start of each financial year to ensure that an approved budget amount is provided. Auditors for the comment, the approved budgets were not presented up to the time of finalizing the report. On page 298, donation register. Finding, we noted from the review of the correspondence file that the center received donations. However, there was no donation register in place. A sample of the donation received includes 2 vehicles and cash amounts of 19,000, 77,000, 2,217,250 in 2015, 17, 19 respectively were also received. Recommendation, management should ensure that the donation register is in place and record all donations received. Auditors for the comment, we will do a follow-up in our subsequent audit. On page 299, difference between financial statement and DRF collection. We noted difference between the reported amounts in the financial statements and DRF revenue collections. Summary of the differences are shown below, while the details of the differences are provided in Annex A. Recommendation, management should ensure that the differences are adjusted accordingly and revise the financial statement. Auditors for the comment, the variances noted are still outstanding as the financial statement are not adjusted to this effect. Some of the points has been addressed, so I would not be reading them. 3.2.7 on page 304, difference between statement closing cash balance and notes. From our review of the financial statements, we noted that the closing balances on the face of the statements varies with the respective notes. Details are shown in the table below. Recommendation, the cash book should be reviewed with the financial statement to ensure all transactions are completely and accurately posted. The adjusted financial statement should be presented for our review. Auditors for the comment, we would follow up on this in the subsequent audit. 3.3.1, wrong postings in the cash book. A review of the cash book revealed wrong postings in the cash book for the period 2015 to 2020. The unpresented and undebited checks issued in the previous months but presented in the current month from the bank reconciliation have been reposted in the cash book. Also, review of the payment vouchers revealed that a wrong amount was posted in the cash book, thus causing an overstatement of 11,645. Details are shown in the table below. Recommendation, the bank reconciliation should include all unpresented checks until they are presented or stale. Management should ensure that the cash book is correctly adjusted and sent to our office for verification. Auditors for the comment, evidence of this rectification was not presented for our review. Therefore, the recommendation remained unresolved. Please refer to page 309, improper bank reconciliation statement. Finding, we noted that there was no evidence of review on the bank reconciliation prepared by the principal accountant. We also noted that it was not correctly prepared as unpresented checks for 1 month are brought to the next month as uncredited checks. Recommendation, management should ensure that bank reconciliation are adjusted accordingly and reviewed by senior officer to avoid or correct errors once they occur. Auditors for the comment, no evidence was presented for our review, therefore the finding remains outstanding. Page 312, 3.5.1 cash payments without documentation. We noted an amount of 71,400 cash withdrawn was given to the CEO on his travel to Arusha, Tanzania to attend the Africa Ophthalmology Forum on Leadership Development Program to buy two Westfield people, and for his incidental travel expenses. The payments was not supported with documentation like invoices, receipts, etc. Recommendation: management should ensure all required supporting documents are provided for our review. Auditors for the comments: supporting documents were not presented for our review. Therefore, the finding remains unresolved at the time of finalizing this report. Page 314, 3.5.3, payments not recorded in the cash book. A review of the cash book and payment vouchers showed that payment vouchers totaling 116,350 were not posted in the cash book. Details of sample extract are shown below. Recommendation: management should ensure that all the unrecorded payment vouchers are posted in the cash book and the adjustments sent to our office for verification. Auditors for the comment: we could not confirm the adjustment because the 2014 adjusted cash book was not presented for our review upon request. 3.5.5 on page 316 on presented payment vouchers. Review of the payment vouchers and the cash book from 2017 to 2020 revealed that payment vouchers totaling 4,157,597.55 were not presented for audit inspection. Details are shown in the Annex C and summarized below. Recommendation: management should ensure that the payment vouchers are presented for audit inspection. Auditors for the comment: the payment vouchers were not presented up to the time of finalizing the report. Late payment of withholding tax. During our audit, we noted that tax withheld in January to December 2019 was only remitted to GRA in March 2020. Recommendation: we recommend that withholding tax should be collected and remitted to GRA in a timely manner. Auditors for the comment: we will do verification during our subsequent audit. Duplication of allowances. The center entered into a contract in 2016 and 2017 to rent a furnished house located at Manjai Kunda for the chief executive officer. The rent costs $175,000 per year, with two payment agreement plans of $87,500 at the beginning of every 6 months. However, a review of the payroll revealed that the CEO was also paid a monthly rent allowance of $1,500 in the year 2016. (3.6.1) Contracts Committee finding on page 319. We noted that Contracts Committee of the Center was inactive for the period under review. Procurements were made without evidence of the Contracts Committee meetings proceeding. The Center also made series of procurement both within and overseas without evidence of following the required procurement process. Detailed below are some of the payments extracted in respect of such procurements. Recommendation: the board should ensure that a well-functioning Contracts Committee is put in place and proceedings be recorded. Auditors for the comment: we will do a verification during our subsequent audit. (3.7.2) on page 321, technical/national duty allowance. We noted that technical/national duty allowance was paid to the following staff from January 07 to August 2014 without evidence of approval from the board. Details are shown below. Recommendation: management should ensure that approval is granted for all payments before issuing it. Auditors for the comment: no evidence of board approval was presented for our review. Therefore, the finding remains unresolved. However, we will do a follow-up in our subsequent audit. Annual increment on pay scale. Review of the payroll revealed that staff were not correctly shifted to their yearly incremental points as per their months of appointment or promotion. Staff are instead moved in January of each year, regardless of the effective month. Auditor recommendation: management should ensure that annual increments are based on the appointment or promotion month of the staff concerned. Auditors for the comment: no evidence of correcting was presented for our review. However, we would verify during our subsequent audit. 150% of allowance increment. We noted that a memo was raised by the former Chief Executive Officer dated 2nd July 2013 conveying the approval by the Interim Management Board on SHEIKH ZAYED Regional Eye Care Center top-up allowance called duty allowance and a board allowance to 150%. However, the meeting minutes relating to the approval of the increment was not presented for our review. Recommendation: management should ensure that minutes conveying the increment is furnished to our office for inspection. Auditors, for the comment, the meeting minute was presented for our review, was not presented for our review up to the time of finalizing the audit report. On page 324, 3.7.6, leave of absence without salary. We noted that the Personnel Management Office gave a retrospective study leave without salary approval as per letter reference that dated 26 August 2020 to X. The period of the study leave was 1st August 2013 to 31st March 2015. Prior to the retrospective approval, he was paid basic salary of 4,778.33 for the period 1st August 2013 to 28 February 2014, amounting to 33,448.31. Recommendation: management should ensure that the amount paid during the period of the leave without salary is recovered back to the account. Auditors, for the comment, no evidence of recovery was presented for review up to the time of finalizing the report. Consultancy allowance 3.7.7, consultancy allowance in advance. We noted that the administrator of the Central wrote requesting for the Chief Executive Officer advance payment of his consultant allowance from January 2018 to December 2018, dated 28 November 2017, amounting to 300,000 before the due month for payment. Recommendation: management should desist from advance payment where necessary. Auditors, for the comment, we would follow up in our subsequent audit to confirm the non-occurrence of such act. 3.7.8, Chief Executive Officer position. We noted that the former Chief Executive Officer X was appointed by the Personnel Management Office on a letter reference that dated 17 October 2007. In 2015, he applied and got approval for study leave with salary for a period of 1 year effective from 12 January 2015. He later sought for an extension in 2016, which was also approved for another 1 year. Further to the completion of the extension for study leave, review of a letter dated 1st October 2017 revealed that he was written to inform him that his leave has ended and he should resume duties. However, he only responded on the 16th April 2018. Review of the correspondence revealed that the current CEO was appointed as per reference that dated 13 March 2017, effective 1st January 2017, even though the former CEO continued to receive basic salary until August 2017. We were not provided with evidence whether the former CEO appointment was terminated or not. Recommendation: the appointing authority should ensure that a single position is not occupied by two individuals. Auditors, for the comment, evidence of regularization was not presented for our review. However, we are informed by the accountant that X was confirmed by the board after his studies as consultant, while X remains as the CEO and a senior consultant. Currently, X maintains only the senior consultant position, while X by the CEO. Vacancy 3.7.9. We noted from the board meeting minutes dated 16 January 2019, members agreed that all unfilled positions should be advertised and filled in 3 months. However, these positions are yet to be filled. Details are shown in Annex D. Recommendation: management should ensure that vacant positions are filled for the smooth and effective running of the center. Auditors, for the comment, no evidence of filling the vacant position was presented for our review. However, we will follow up in our subsequent audit. Page 330, lack of loan scheme. Finding: we noted that loans were given to staff of the center during the period under review without a loan scheme. Table below is a sample of loans issued to staff. Recommendation: management should ensure that the loan scheme is instituted without delay and issuance of loan be within the requirement of the scheme. Auditors, for the comment, we encourage board and management to ensure that a detailed loan scheme approved by the board is put in place before issuing any new loan. 3.7.14 lack of training policy. During the audit, we noted that the center made payments of 1,932,713 on staff training. However, there was no training policy in place. Details are shown in Annex E rather. Recommendation: we recommend that the institution have a training policy in place to guide the training that they are supporting their staff. Auditors, for the comment, the management response does not implement our recommendation. Training policy will serve as a reference point to both management and the staff for any planning to undergo training. It will also reduce the risk of bias. Page 334 on verified laptop. Finding physical verification of assets revealed that the laptop issued to the IT officer was not provided for our verification. Recommendation: management should ensure that a follow-up is made to recover the laptop from the officer concerned. Auditors, for the comment, no evidence of management follow-up to recover the laptop was presented for our review. Neither was the laptop presented for our verification. Page 339, that is the review of the ROTP account. 4.1.1, non-performance of bank reconciliation. Finding: during the audit, we noted that the ROTP account did not perform bank reconciliation for the period under review. Recommendation: monthly bank reconciliation should be performed and reviewed on time to help in detecting and correcting errors. Auditors, for the comment, evidence of reconciliation were not presented for our review. Therefore, the finding remain unresolved up to the time of finalizing the report. (4.1.2) Difference in closing and opening monthly cash book balance. We noted that there were differences between the closing cash book balance of a given month and the opening balance of a certain subsequent month. A sample is shown below. Recommendation: the cash book should be properly closed and the closing balance of a given month should be the opening balance of the following month. Auditors, for the comment, the adjusted cash books were not presented for our review. Therefore, the finding remain unresolved up to the time of finalizing the report. On page 342, 4.1.4 on presented bank statement. The following bank statements were not presented upon request for our review. Recommendation: management should endeavor to provide us with the remaining bank statements for verification. Auditors, for the comment, the bank statements were not presented for our review. Therefore, the finding remain unresolved up to the time of finalizing the report. On verified cash book posting and bank lodgements. Finding: we noted that an amount of 11,876,187 was received as per the receipt books, but we could not confirm its lodgements into the bank accounts due to the absence of the bank statement. Out of that amount, we could not also confirm transaction amounting to 6,973,707 posted in the cash book. Details are shown below in Annex G and a summary summarized below. Recommendation: management should ensure that receipts are posted in the cash book and adjust the financial statement and present them for our review. If the state transactions are posted, provide us with the evidence as to when and where the transactions are posted. Auditors, for the comment, the updated cash book were not presented for our review. Therefore, the finding remain unresolved up to the time of finalizing the report. 4.2.2 missing receipts leaves. Finding: we noted that receipt number 00044 and 00045 were removed from the receipt books and could not be seen. They were also not posted in the cash book. Recommendation: management should endeavor to provide us with the missing receipts for verification. Auditors, for the comment, the missing receipts were not presented for our review. Therefore, the finding remain unresolved up to the time of finalizing the report. Page 348, payment without supporting documents. During the audit, we noted that there were payments amounting to 3,164,285 made from the ROTP accounts that were without supporting documents, such as invoices and receipts. Details are shown below in Annex H and summarized below. Recommendation: all the relevant supporting documents should be presented for a review. Auditors recommend the supporting documents for these payments were not presented for a review. Therefore, the finding remain unresolved up to the time of finalizing the report. Loans. Finding: during the audit, we noted that the ROTP issued a loan amounting to 300,000 on the 27th February 2017 to ZAYED Regional Eye Care Center. 900,000. This loan was said to be for the payment of salaries of the ZAYED Regional Eye Care Center consultants. No evidence of board approval for the loan was presented for review. Recommendation: management should provide us with the board approvals on the issuance of the loan. Loans should not be issued without seeking board's approval. Auditors recommend the board meeting minute relating to the approval of the loan was not presented for our review. Therefore, the finding remain unresolved up to the time of finalizing the report. Unpresented payment vouchers. Finding: during the audit, a sample of payment vouchers was selected from the cash book for our audit. However, payment vouchers amounting to 5,644,363 were not presented for our review, for our inspection. Details are shown in Annex I. Recommendation: the payment vouchers should be presented for our verification. Auditors recommend the payment vouchers were not presented for our review. Therefore, the finding remain unresolved up to the time of finalizing the report. Page 352, 4.4.1, lack of personnel files for technical staff. During our audit, we noted that the ROTP does not keep personnel files of its teaching staff. Recommendation: personnel files should be kept for each of the teaching staff with all necessary documentation. The staff appointment letter should be presented for our verification. Auditors recommend we will do a follow-up to verify management implementation of our recommendation in our subsequent audit. Page 354, unutilized vehicles. We noted that a Toyota van and a Nissan Terrano with number plate that X and X respectively were owned and used by ROTP. The A3 NGO 3024 stopped running on the 25th July 2012, whilst the order stopped on 14 January 2015. In a senior management team meeting minute dated 1st April 2015, it was suggested by the chairman for the vehicle to be auctioned and proceeds be used to buy a new vehicle. Auditors recommend we will do a follow-up to verify management implementation of our recommendation in our subsequent audit. Honorable Chair, that's that for the...
Thank you very much, National Audit Office. Now we'll move to the board chairman to give us the executive summary of the activity report, which can be found from page 3 to page 5. Yes, please. The executive summary of the activity report. You can have pages 3 to 5.
Thank you, Mr. Chairman. First and foremost, we at SHEIKH ZAYED Regional Care Center are delighted to submit this report for the National Assembly Select Committee on Health, Women, Children, Refugees, and Disaster Response. The report
Sorry,
covers the period.
Can you take it again? The mic was not good. Can we start it again? Sorry
Okay.
for that. Yes.
We at the center are delighted to submit this report to the National Assembly Select Committee on Health, Women, Children, Refugees, and Disaster Management. The report covers the year 2016, am I right? 2006 to 2022. And basically, it highlights this, the center's vision, the governance structure, the priority areas of operation, departments and units that form the center, activities, and eye care service delivery, major achievements. These are just highlights, challenges faced by the center during the years under review, way forward, and other vital information that may be of interest to the Assembly. SHEIKH ZAYED was officially opened in 2007 with a mandate to provide quality eye care services to the people in the sub-region, and at the same time serve as a regional ophthalmic training center. The center has come a very long way to become what it is today, a center of excellence in eye care services for professional training and a facility for scientific research in the fields of ophthalmology. Today, the center is rated as a top-notch special hospital, standing shoulder to shoulder with any reputable eye care facility on the African continent. Over the years, the center went through an evolutionary phase that was characterized by hard work, commitment, adherence to professional etiquette, dedication to duty, and a warm and caring relationship with the hundreds of patients. I'll change this to thousands of patients we see in a year. And of course, the hundreds of patients we see daily. The institution cannot excel without the active support of a vibrant administration, good governance, and the wise stewardship of its parent body. SHEIKH ZAYED is not an exception. We at the center express heartfelt gratitude for the center's management, precisely the board, the Ministers of Health and Finance and Economic Affairs, the PMO, and its course of partners and friends that continue to guide and support us all the way. Currently, there are 44 professional clinic staff, including 4 consultant ophthalmologists. Of course, there's a Cuban ophthalmologist, 8 technical staff, and 104 support staff at the center. The center's CEO and his fellow consultant ophthalmologists are among the among the most qualified eye care specialists on the African continent. The CEO is assisted by a senior management team in decision-making, policy articulation, and of course, career development. The center's clinical services are headed by a team of 5 ophthalmologists. They are consultants, 10 senior ophthalmic medical assistants. Eye care services, Mr. Chairman, are backed up by technical units and dedicated team of ophthalmic clinicians in the various units and departments. The range of services provided by the center and the estimated number of patients seen by the staff between 2006 and 2020 is presented in the report, in the body of the report. The eye clinic is by far the biggest department of the center in terms of service delivery. The center has registered remarkable success over the years but not without, of course, challenges and lapses here and there. Like any public institution or public hospital in the country, we at SHEIKH ZAYED had to grapple with many challenges during the year 2006, during the year 2020, 2021, 2022, because of the COVID-19 pandemic. But they were not necessarily insurmountable. The challenges are clearly articulated in the report, and management was able to address them head on. The present challenges include the center's inability to replace, very critical worn-out equipment under inadequate budgets to cover other charges, as you could see from the income and expenditure aspect of the budget. The center has developed a set of core values, and these values do help in setting standards. And we are committed to pursuing these values over the next 5 years in response to the challenges and demands for quality service. The core values, of course, are clearly stated here. As we know, values serve as benchmark for performance. Okay, they only don't. Of course, they set the pace, right? And they serve as yardstick to measure performance and quality of care. So we have. We want to pursue quality and professional excellence, equity and fairness in all our dealings with our clients and partners. We want to ensure that learning and service delivery are in tandem with our capabilities and modern developments in sciences. Compassion and diligence are important values for our staff and our partners. Accountability, transparency, efficient and effective service delivery, and finally, progressive collaboration and partnership, both home and abroad, and in the sub-region particularly. We have a vision, the center has a mission, and this mission drives our vision. And the mission and the vision chart out the way forward for the institution. Provision of quality and comprehensive eye health services to our clients and to impact successfully and to impact scientifically sound ophthalmic knowledge gathered with appropriate and relevant skills to our trainees for the maximization of their roles as efficient, polyvalent eye health workers. As was mentioned earlier on, SHEIKH ZAYED is serving as a regional training center as well. We also have a residency program at the center. Our conviction is really to ensure quality in all our training programs. Our mission, yes, a center of excellence for quality eye care services, delivery, and training. We have a patient's charter. A patient's charter for a public institution is an expression of an institution's commitment to maintaining not only quality service, but to ensure client satisfaction, okay? And watch for ethical issues that may creep in during service delivery, because ethics is very important in the medical profession. It's all about respecting and recognizing the rights and dignity of the people, the right to ophthalmic care, the right to accurate information, the right to timely service, to enjoy timely service, the right to choose the right to choose. Okay, healthcare provider and services. The right of protection from harm and injury with the ZAYED while you are at the ZAYED facility. The right to privacy and confidentiality. It's also important that the person's right to be treated courteously, and in a dignified manner is ensured. Right to dignified treatment, as it were, the right to continuity of care, so that there's no abrupt discontinuation of eye care. As far as our clientele are concerned, the right to personal opinion and to be heard, of course. The right to emergency treatment, the right to participate and or suggest or make suggestions in the planning and the management of the center with regards to its services. Thank you.
Thank you, Mr. Chair. We may proceed to page 34
Of the report?
of the report, so
Okay.
that we may have the challenges and the way forward for ZAYED Regional Eye Care Center. Page 32.
Page 32.
Yes.
Okay. Page 32. Okay. Here. Page 32. Okay. What happened to my page 32? Oh. Challenges, Mr. Chairman. Of course, they are not limited to the ones we have listed here, but the major ones, as it were, are inadequate space in the OPD, that's the outpatient department. The space is not adequate. Therefore, it is important. There's a need for infrastructure, the hospital infrastructure, to be examined closely with a view to identifying space that is required for quality service provision, inadequate budgets for other charges. These deficits, we wonder when it shall end. the gap between our budgetary submissions and the actual payment of the subvention to the center. It's a matter of concern for both the board and the staff. The need for hospital beds and other critical items. Yeah, we are running an inpatient service, and unless and until we provide enough beds that are commensurate with the rate of admission, that'll be problems. Painting of the hospital complex, as I said, as long as other charges are increasingly reduced, we'll continue to face certain challenges like maintenance and painting, of course. The aesthetics of a public institution speaks for itself. So we're really concerned about the aesthetics of the hospital. A first impression can last very long in people's minds. Insufficient supply of drugs, medication, and surgical consumables. Again, these are critical items that are required for quality eye care delivery and laboratory services. At the moment, we don't have a lab, do we? We don't have a lab, and sometimes we count on the Recon Hospital to run few tests for us. And this is a huge, huge problem. COVID-19, the impact of COVID-19 on the activities of the center also posed a challenge. We haven't been able to overcome the challenges, though. But there remain some of the sticky ones are still haunting us. In response to the epidemic, the center was able to purchase and install hand sanitizers and enforce the face mask policy among both staff, patients, and escorts. Thank God the COVID-19 scare is over now. We only hope and pray that there will not be another wave of COVID-19. You know, this is a very serious condition. Donations, yeah. St. Peter's ex-people High School Association donated some face masks, cleaning material, and sanitizers in response to Sheikh Zayed's COVID-19 containment policy. We had a COVID-19 containment policy. And in the process of implementing that policy, some donors came to our aid. 10 visitors, we had some chairs, visitors' chairs. And as we know, it is not enough to articulate one's challenges and problems. Correspondingly, there should be a way forward or a mechanism to address these challenges. And some of the activities we thought we should undertake to address the challenges or minimize their impact include the 6 points articulated here: to maintain eye care, quality eye care services, provide special services in eye care, increase capacity in training for both the regional ophthalmic training program and the residency program. The residency program is a program that enrolls practicing medical doctors and train them for a period of 4 years. For a period of 4 years, for them to specialize. And the country is critically in need of specialists in ophthalmology. Before this residency program was introduced, governments had to go out to receive training to become specialists and consultants. At the moment, we have how many of them? At the moment, we have 4 medical doctors undergoing training, specialist training at Sheikh Zayed. It's also important that we develop the center's capacity in research in partnership with interested partners, because research generates information required for planning and required for implementing and improving eye care service in the sub-region. And finally, provision of a laboratory in the hospital. As we all know, laboratory service is a critical component of medical care. Thank you very much. Thank you.
Thank you very much, Mr. Chair.
I skipped one point, which is very critical: equipping the center with.
You may bring it forth. Bring it.
Equip the hospital with modern eye care facilities. Yeah, very important. We also want, state-of-the-art, facilities for providing quality eye care. Thank you.
Thank you very much, Mr. Chairman of the Board of Directors of Sheikh Zayed Regional Eye Care Center. GPPA, was there any compliance done on your procurement department during the years under review? That question will go to the Chief Executive Officer.
Honorable Chair, we had a compliance review between 2017 and 2020.
Thank you.
There
And you have the report with you?
Yes, there was a report.
Okay, thank you. Thank you. It's rather unfortunate that we do not have representation from GPPA in the building, but that is an in-house shortfall and we'll work on it. Once again, thank you very much to the board and management of Sheikh Zayed Regional Eye Care Center. And we are also grateful to our key stakeholders, that's the National Audit Office, to our subject matter specialists, to our clerk, the media houses present, and to my fellow honorable members. You know, so on Monday, which will be the 5th of February 2024, you are rescheduled for the consideration of your accounts to commence by 10 a.m. Honorable members, do we have any other business to discuss? In the absence of that, can I have an honorable member to raise the motion that we adjourn this session till tomorrow, Thursday, the 1st of February 2024?
I move that we adjourn the session till on Monday, 10 o'clock.
You can take it again. Take it again.
I move that we adjourn the meeting till on Monday.
You may take it till tomorrow.
Till tomorrow, sorry. I'm confused. I thought it's Thursday. Thank you. Till tomorrow.
It has been moved.
Seconded.
It has been moved and seconded that we adjourn this meeting till tomorrow, Thursday, the 1st of February 2024 at 10 a.m. Those in favor, please say aye. Those not in favor, please say no. The ayes have it. The meeting stands adjourned till tomorrow. Thank you. Gentlemen and ladies, you are excused.